billion with a B.
Hi, once again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you, and it's my pleasure to welcome aboard Eric Relph of Comstock Investments. We'll take a look at how we wrapped up this trading week. Eric, on Friday here, you had the grains just kind of sliding across the finish line, and it was not a good look heading into the weekend. What happened there?
You've got reciprocal tariffs is the word being reported, and any U.S. goods that are U.S. imports to other countries that are being tariffed, and there's going to be a laundry list of them, are going to see reciprocal tariffs at the same degree, or at least that's what we're being told at this point. And I think that gave the market enough angst that they definitely were edgy. And anytime you have a market that's anxious, it usually favors the downside. And we saw the path of least resistance today was from that fund long liquidation. They're holding a massive position in corn, a fairly long position in soybeans. And we've already seen them kind of start to get out of their short wheat position. So maybe they were taking a little bit of a breather on that today as well. So just kind of a lot of things across the board that factored into this, all triggered by that tariff talk early this morning.
So when you talk about how long they are in the corn, what are you talking, over 300,000 contracts or what?
Over 300,000, and I would say closer to 350 plus, depending on how this week shakes out. And again, as I've said many times, that's one of my sticking points with the USDA. Well, in this case, it's the CFTC releasing that data the way that they do. We get the information on Friday afternoon as of the prior Tuesday, so we never really know where we're at. But private estimates have them somewhere around 350 to 360,000 long corn right now.
What about beans?
Beans are in the 150 to 170 range, and that isn't, I mean, that's a large position, don't get me wrong, but it's nowhere near record. But that's being explained by the anticipation of the crop coming out of Brazil this year. Potentially north of 170 million metric tons is definitely cause for a little bit of caution trying to be too long in that market right now.
So did we do any damage on the charts on corn or beans today?
I would say no damage done. Everything that needed to hold did. I'm going to look real quickly just at the front months of a couple of these here. I'll pull the charts up and we can kind of share that with folks. But you can see on the March corn finished down 7 3/4. No damage. I mean, you're holding any kind of trend line support. You're still in an uptrending channel. Again, not the end of the world by any stretch of the imagination. We did finish slightly higher for the week just because we had such a rough finish to last week. But we did recover that early week and then kind of faded off into the end of the week. And so nothing too bad there, not anything to raise any technical flags. Similar situation in the soybeans, although much closer to that trend line support. We maybe could pull another 6 or 7 cents out of the March soybeans before we start to do some technical damage and start flirting with trendline support levels that really need to hold here in the short term.
So what kind of moving averages are you looking at there?
So on this particular chart, I always function off of 2 charts. I just can't share everything at once. So on this particular chart, I've got a 4 and a 15. That's just one of the algorithm triggers that I watch. When the 4 crosses the 15, it's a buy or a sell. So I always keep that one up on here. But this 23-day exponential moving average, that's a big one that I watch. It's one that the funds tend to favor. It's programmed into a lot of algorithms. And that runs in there at 1042.5 today. And that's why I say we could see that 6 or 7 cent drop from this 1049.5 before we hit that support, which would kind of coincide with short-term trend line here as well.
Is this normal for this time of year, do you think?
It's normal for our bean sales to start backing off this time of year. And as a result, it's somewhat normal to see the market come under a little bit of pressure. And so I'm not overly shocked by that. But it seems like everything catches people off guard. And then they go, oh, yeah, I remember that from last year or the last 5 years, whatever the case may be. But this is a time of year where Brazil gets close to harvest, and they are now. And that's going to be a whole nother issue that comes forth in the next couple of weeks. Are they going to be able to get harvesting at a pace that they would normally see this time of year? And is Mato Grosso going to be rolling in earnest with their safrinha planting by the end of the month, as they need to stay on track for any kind of normalcy?
The wheat market's kind of sneaky, isn't it? It just keeps kind of slowly climbing higher here, while soybeans and corn seem to get all the attention.
The funds had been seemingly, and you don't ever know for sure, but seemingly kind of taking a short position in the wheat against their long row crop trades for quite some time. And I think that got beat to a point where the fundamental factors are going to take over at some point. And that really happened here in the last week and a half, when we started hearing about a 10-year low in stocks to use ratio on a global level. We started hearing about the worst Russian crop conditions this century. We started hearing about potential winter kill throughout the Midwest and the plains, and another round of extreme cold coming to those growing regions next week if the forecast is accurate. So a lot of fundamental factors that are supportive of this wheat market, I think, have spooked them out of a lot of their short position. And that's what we've seen here.
Well, I know I live not too far from Nashville, Tennessee. I noticed last night some of the trees are budding out. So, the weather has kind of given a head fake to some of the crops and the plants out here.
Yeah, for sure. And you know the landscape out there. And of course, I'm from Western Kansas, so I keep tabs on a lot of the news stations and still follow National Weather Service out of Dodge City and stuff on social media. But at one point this week, and I can't remember if it was Tuesday or Wednesday, liberal Kansas was 75 and Hayes was 25. And so there's talk about a head fake. The high in Garden City one day, I think maybe it was Monday, was 85, and the next day the low was 25, and barely climbed off of that throughout the day. So just amazing fluctuations in a very small geographic area, and now they're talking single digits or possibly below zero for several days next week.
Yeah, I know it well. I remember back when I was still in my farming days out there in northern Kansas, and it was 92 one day in January, and the next day it snowed.
Yeah.
So, yeah, it can do that to you out there.
Yeah.
All right. So we talked about the weakness in the grains heading into the weekend. The one thing that was really making some big moves, and it's been volatile all week, was the equity markets. And we'll talk about maybe if there is any correlation between that and the livestock trade here in a moment. But what are you watching for when it comes to things like the Dow and the crude oil markets, the gold market, and that sort of stuff?
It's all centered around these foreign relations. I mean, our tech relies on our import export market in every facet. We have to get product in, we have to build chips somewhere, we have to assemble all this stuff. The tech, which is most heavily reflected by the Nasdaq if you're just looking at the futures market. But the tech sector is going to be very sensitive here for a while we're talking about these reciprocal tariffs. And we've got all this chatter going on about China. They were supposed to talk Tuesday, then Wednesday, still haven't. The formal complaint filed with the FTO by China. And this is all very, very heavy stuff for a lot of these big companies that work on a global level. And I think that's a lot of what we're seeing here.
If you start seeing money coming out of the stock markets, there's a lot of talk about growing inflation fears and that sort of thing. Would that be a good thing for commodities?
It usually is, because commodities are viewed as an inflationary hedge. Durable goods are going to outperform during an inflationary cycle. If that ends up being where we go throughout this tariff situation, then commodities would be the winner. It's unfortunate for the overall economy, but it is good if you're sitting behind a screen at a commodity desk.
At one time, it used to be thought that the cattle market was kind of tied to whatever the Dow did. I don't know if that's true anymore. The Dow had a big down day here on Friday. Cattle seemed to kind of hold their own after a really rough week. When you get that much volatility in the cattle trade, does that kind of seem to hint at maybe a change in trend or not?
Yeah, definitely. And I've pointed out a few things this week to our premium subscribers who get my morning videos, and I'll share two of those with you here. Don't want to give up the goose, but we'll look at a couple of things here. April feeder cattle has been the big one that I've been kind of keying off of. The March is going to be tied to cash, so at some point you have to discredit the front months. And so I've been watching this April contract a little closer. And I noticed when we started the break, it was like, okay, what's going to hold it? Are we going to hold these consolidation lows from late January? If those give way, then what's next? And I don't have it on here, but this little opening gap back here to start the year between December 31st and January 2nd, that little opening gap on the chart coincided almost perfectly with the 50-day moving average. And that is where we hit our low yesterday. So there was cause for that technically to hold. And then we saw a little bounce back early this morning, traded up to 266 before finishing the day down 17 cents at 264.82. So now I'm noticing also we're kind of starting to build a head and shoulders formation here. We've come up here, we've traded back down, we're coming up here, we round off, trade back down, we hit that support level. Now, are we going to grind sideways for the next couple of weeks and then have some trigger for a breakdown, which would be the result that you would expect to see from a head and shoulders formation? Or do we take some of this right back and resume our upward trend? Of course, we don't know what the answer to that's going to be, but the setup is there. And technically, that's going to be watched closely by anybody programming algorithms for the funds here for the next couple of weeks.
Joel Camp and I were just talking about that on Wednesday, that very thing. At that time, it looked like it was preparing to bounce, but it just really didn't yet. And on that same chart that you had, I don't know if you can bring that back up, but
Yeah.
it looks like maybe that feeder cattle contract actually took out that long-term uptrend line
Oh, it did.
today.
Yeah.
Maybe it has the last couple of days. What do you think there?
Yeah. I mean, we'll just throw it up here so people can
Okay.
see. I mean, generally that's about your trend line. And you can see once we had that down day on Tuesday, we tried to get back through it on Wednesday, failed, and there we are.
Don't you figure if you do that for 2 days, that would be confirmation?
You would think, yeah. And really we failed 2 days. We jabbed it on Wednesday, failed on Thursday, and down we went.
Wow.
So that looks to me like it's confirmed that maybe our highs are in. But now what are we going to do from here? We can keep beating our head against trend line resistance and keep moving higher. But I think given everything that's factoring in here, the more likely scenario is we are gonna grind out here for a little while, and then whatever the result of any of these headlines is going to be, that's going to be our trigger. And at the same time, we've got to watch what's going on for outside influence. Right now the Dow's down 400 plus, Nasdaq down almost 300. It's not a good looking day.
So does does the hog market look any better than what the cattle do?
Much better, as has often been the case throughout this entire rally. Anytime you get a little break in the cattle, you seem to see the hogs rejuvenated. And here's a look at the June contract. I mean, we're challenging the contract highs that we posted just the end of last month. We fell off so hard, I think everybody thought, okay, it's over. We got close to the 100-day moving average, rebounded immediately. And this week, we've just gone straight back up to the highs that we posted at that time. And it's kind of true across the board there. You look at July, made a new high today, closed at the high. Really impressive trade out there. And I think that's relative to the fear. Here's the August, another new high. I think it's relative to the fears that we're going to have such disease issues that we're going to be light numbers come summer. It's going to take that long before we know, but I think that's the anticipation at this point.
Now, it doesn't show up so much on that particular contract, the one you had a little bit ago. It looked like a triple top, and I'm thinking way back a long time ago, someone had told me that triple tops and hogs never hold. I don't
Triple
know if
tops
that's
don't
true or
hold.
not.
Triple tops don't hold. I guess the theory behind that is if you're able to get a market to challenge a high 3 times, it's ready to go through. Uh, double
Okay.
tops often will hold because you hit it once, now you've challenged it, and then failure. But if you get a triple top, then they often don't hold.
Well, with cattle so high priced and you have eggs, I'm hearing bringing as much as $7, $9, $14 a dozen now. It makes pork look pretty attractive, doesn't it?
Well, absolutely. I'm going to make some pork green chili for the Super Bowl, so I'm excited for that.
It's going to be a busy weekend when it comes to food products and food preparation, that sort of thing.
Oh,
One
it's
and a
wild.
half billion chicken wings, I hear,
How
served.
many?
1.5 billion
Billion with a
are going to be
B.
served this weekend. Probably not here, but I'll take a hamburger any day. But
I'll take some Nashville hot chicken. How's that?
there you go. There you go. All right. Well, anyway, thanks for walking us through everything here. Other than that, what are you going to be watching for next week here when we come back in on Monday?
I really want to see, Trump he doesn't sleep. He doesn't stop working. He doesn't take breaks. And I want to see what he does over the weekend. That's going to steer us starting into next week. Um, and that's going to be, unfortunately, I'm going to have to be checking in at halftime during the Super Bowl to see what's going on as we enter into the 7 o'clock hour. Equities will start trading at 5 o'clock. That's going to set the tone. There's just so many balls in the air right now, and they're going to announce what they're going to do this weekend. So we should hear something.
Should be an exciting week coming up. Be prepared. All right. Well, thank you, Eric. I don't even need to ask who you're rooting for. But anyway, thanks for all the information. We'll talk to you on the other side of the big game next week. And I wish you well. Eric Relph with us. He's with Comstock Investments. That'll do it for this Friday episode. And thanks again for joining us. For producer Brianne Jenkins, I'm Marlin Bohling. We'll catch you next time here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.